Gold and silver bullion leap to one-year highs on U.S. job openings plunge. Gold and silver bullion leapt in price Tuesday, hitting 13-month and 12-month highs respectively against a falling dollar after new U.S. data said the world's largest economy is seeing a steep drop in the number of new job openings. Gold broke through $2,000 per troy ounce for the fourth time in 3 years, while the silver price came within 7 cents of $25, a 7-year high when reached during the first wave COVID crisis of 2020. With Friday set to bring non-farm payrolls data for March, today's U.S. data said that U.S. factory orders fell more sharply than expected in February, while the number of job vacancies across the economy sank by well over 600,000 for the second month running, marking the fifth worst decline on the two-decade Jolts series and badly worse than the 163,000 drop predicted by consensus forecasts. New York stock markets fell 0.3% on the news, and U.S. crude oil retreated $2 from $81.50 per barrel, a 3-month high reached after the OPEC Plus cartel of oil producer nations cut output in a bid to stabilize prices. The dollar gold price meantime hit $2,020 per troy ounce, extending last month's 6.4% gain with a further $40 rise already in April as bond yields sank, and betting that the Federal Reserve will raise its key overnight interest rate once again at its next meeting in May fell hard. Silver bullion rose faster, jumping 3.9% inside 90 minutes to come within 7 cents of $25 per ounce, the highest price since mid-April 2022. With money pouring into bullion and government bonds, the yield offered to new buyers of 2-year U.S. Treasury debt sank to 3.86% per annum, down by 1/5 of a percentage point from last weekend and fully 1.0% lower than this time last month. Gold bullion has meantime risen by 8.6%, while the S&P 500 index of U.S. corporate stocks has added just 1.6%, and silver traded 17.2% higher in U.S. dollar terms. Having shrunk 2.7% in March, the giant iShares Silver Trust yesterday saw its first net outflow of investor cash in 5 sessions, cutting the quantity of bullion needed to back its shares in issue by 0.3% to 14,430 tons. Giant gold ETF the SPDR Gold Trust in contrast expanded by 0.2% on Monday to need 930 tons of bullion, the most since mid-October, but the number 2 such product, the iShares Gold Trust, was unchanged yet again, having ended March at the same size as it began. Betting that the U.S. Central Bank will raise the Fed funds rate to a ceiling of 5.25% next month sank Tuesday to put the odds at just 2 in 5, down from 3 in 5 on Monday, and its weakest showing since the resolution of Switzerland's banking crisis with the shotgun takeover of Credit Suisse by UBS 2 weeks ago. With the dollar losing 0.5% on the currency markets, gold and silver jumped less steeply for UK and Euro investors, touching £1,618 and €1,648 per ounce respectively, but gold bullion set a new all-time spot market high for Japanese investors at 8,581 yen per gram, more than 10% higher from this time last year. Yesterday's ISM PMI report said that U.S. manufacturing activity shrank for the 5th month running in March, with Europe also shrinking on S&P Global's PMIs while China flatlined according to the Caixin survey.